A 28 billion euro company gone in 9 days. But what investigators discovered wasn't just the biggest financial fraud in German history. It was something far more sinister. The company's chief operating officer wasn't just stealing money, he was stealing state secrets. This is the story of how a payment processor became a front for Russian intelligence and how one man fooled an entire nation while living the ultimate double life. June 2020. Wirecard's stock price crashes from 191 euro to just 2 euro in a matter of days. 2.1 billion euros simply vanished into thin air. The CEO gets arrested, but the COO, he disappears completely. What the world didn't know was that Jan Marsalek had been planning his escape for years, because he wasn't just a corporate executive, he was a spy. The story begins in 1999 in a small German town called Aschaffenburg. A little-known company called Wirecard appears, and their first clients weren't exactly what you'd call respectable. Adult websites, online casinos, betting services, all the businesses that traditional banks wouldn't touch. But Wirecard saw opportunity where others saw risk. They started processing payments for the financial outcasts and taking a cut from every transaction. It was dirty money, but it was serious money. Then in 2002, everything changed. Markus Braun joined the company, a charismatic tech guy with massive ambitions. He didn't just see potential in Wirecard, he wanted to turn it into a financial empire. Within a year, Braun had maneuvered himself into the CEO position. The company was about to transform, but not in the way anyone expected. The mid-2000s, Wirecard faced its first major crisis. The United States passed new laws that basically made it illegal for financial companies to process payments for online gambling. Overnight, half of Wirecard's revenue disappeared. Any normal company would have downsized, cut costs, maybe even gone out of business. But Wirecard did something completely different. Instead of shrinking, they started expanding, and that's when the lies began. The financial reports still showed growth, public speeches remained optimistic, but behind the scenes, Wirecard was hemorrhaging money. So they came up with a brilliant solution. They started buying up obscure companies across Asia, the Middle East, and Latin America. Some of these firms were barely functioning. Others existed only on paper, but they became the foundation of what Wirecard called their partner network. It was the perfect cover story. This is where Jan Marsalek enters the picture. Young, ambitious, and ruthlessly efficient, he became Braun's right-hand man and eventually the company's COO. Marsalek took control of the Asian operations, setting up this complex web of partner companies that would allegedly process billions in transactions. The beauty of this system was that it was almost impossible to verify. Documents were signed, accounts were opened, transactions were recorded, but none of it was real. What investigators would later discover is that Marsalek wasn't just running a financial fraud, he was running an intelligence operation. For over a decade, he had been feeding information to Russian intelligence services. The man who was supposed to be building Germany's fintech future was actually working for the Kremlin. And Wirecard wasn't just a payment processor, it was a front for espionage. While Marsalek was busy creating his phantom empire in Asia, Braun was building a completely different kind of fiction in Europe. He stepped into the public eye, appearing at conferences and investor summits. He spoke about revolutionizing payments, about innovation, about the digital transformation of banking. The media loved him. Investors hung on his every word. He even started wearing black turtlenecks, trying to channel his inner Steve Jobs. It was all part of the act. But behind the polished presentations and slick marketing, the reality was very different. As Wirecard's real income continued to decline, the leadership realized they needed to get creative with their accounting. They created what they called trust accounts, supposedly holding billions of dollars for their partner companies in the Philippines, Singapore, and Dubai. These accounts were the heart of the fraud. Wirecard claimed that most of their profits didn't come directly to them, but through these partners, and the money was safely stored in these trust accounts. The paperwork looked perfect. The contracts seemed legitimate. The bank statements appeared authentic, but it was all fake. Every document, every signature, every transaction record, completely fabricated. The money existed only in Excel spreadsheets and PowerPoint presentations. Yet somehow, this fiction convinced auditors, regulators, and investors for years. By 2015, cracks were starting to show. Journalists at the Financial Times began asking uncomfortable questions. Why had no one actually seen these partner companies? Where was the proof of all these transactions? Why did Wirecard keep changing auditors? The reporters started digging deeper, and they didn't like what they found. When a Financial Times team traveled to the Philippines to investigate, they made a shocking discovery. The address listed as one of Wirecard's major partner offices was actually just a retired man's house. The family living there had no idea their home was supposedly the headquarters of a multinational payment processing operation. They were as confused as anyone about why journalists were showing up at their door. Wirecard's response was swift and aggressive. They sued the Financial Times for defamation. They accused the journalists of market manipulation. Marcus Braun personally claimed it was all a conspiracy, designed to destroy the company's stock price. But they didn't stop there. Wirecard hired private investigators to dig up dirt on the journalists. They tracked their movements, investigated their personal lives, and tried to discredit them in every way possible. What makes this even more chilling is what we now know about Marsalek's other activities. While he was publicly defending Wirecard against media scrutiny, he was privately coordinating with Russian intelligence. Reports suggest he helped establish a Bulgarian spy network that operated across Europe. He allegedly provided NATO secrets to the Kremlin. He even had connections to the Wagner Group, Russia's notorious private military company. The scope of Marsalek's espionage activities is staggering. He wasn't just stealing money from Wirecard, he was stealing state secrets from Western governments. And he was doing it all while maintaining his cover as a legitimate businessman. It's the kind of operation that would make fictional spies jealous. Despite mounting pressure from journalists and growing suspicions from some investors, Wirecard managed to maintain its facade for several more years. In 2018, they reached what seemed like the pinnacle of success. Wirecard joined the DAX, Germany's equivalent of the Dow Jones. They became one of the country's 30 most valuable companies, standing alongside giants like Volkswagen and Deutsche Bank. The company's valuation soared to 26 billion euros. Investment funds poured money into the stock. Everyone wanted to be part of the Wirecard success story. It was Germany's answer to Silicon Valley, proof that European companies could compete with American tech giants. Politicians praised the company. Regulators looked the other way. The entire financial system seemed to validate Wirecard's legitimacy. But the Financial Times never gave up. In 2019, they published a devastating series of investigations that included testimony from former Wirecard employees. These whistleblowers provided internal documents that showed the fraud in detail: fake contracts, falsified reports, records of non-existent transactions. It was all there in black and white. The evidence was overwhelming, but Wirecard continued to deny everything. Braun went on German television, repeating the same narrative he'd been pushing for years. He claimed competitors were trying to destroy Wirecard because they feared its success. He insisted the journalists were spreading lies to manipulate the stock price, but this time, the market wasn't buying it. Regulators finally demanded an independent audit. Ernst & Young, one of the world's most prestigious accounting firms, was given a direct task: verify whether 2.1 billion euros actually existed in trust accounts at banks in the Philippines. It seemed like a simple request. Wirecard had been claiming for years that this money was there, safely stored and properly documented. The auditors contacted the banks directly, and that's when everything fell apart. The banks confirmed what the Financial Times had been saying all along: no such accounts existed. The documents Wirecard had provided were completely forged. The 2.1 billion euros that had appeared in financial reports for years had never existed in the first place. The confession came in June 2020. Marcus Braun appeared before the press, and for the first time, his confidence was gone. He admitted that the company could no longer verify the existence of the 2.1 billion. The money that had formed the foundation of Wirecard's success story was probably fictitious. It was the moment that destroyed everything. The market reaction was brutal. Wirecard's stock price collapsed from 191 to 2 euros in just a few days. The company lost over 90% of its value almost overnight. Within weeks, they had filed for bankruptcy. It was the first time in German history that a DAX-listed company had become the subject of a criminal investigation of this magnitude. Marcus Braun was arrested and charged with fraud, market manipulation, and falsifying financial reports. He's been in custody ever since, though he continues to deny the charges. He claims he was deceived by other board members and had no knowledge of the fraud, but investigators aren't buying his story. Jan Marsalek, however, had vanished. He was last seen in Vienna, boarding a private jet just before the scandal broke. According to flight records, he initially fled to Belarus, where he was reportedly given safe haven by the government. From there, he made his way to Moscow, where he's believed to have been living under the protection of Russian intelligence services. But the story gets even stranger. In 2023, it was revealed that Marsalek had been contracting with Bulgarian nationals to carry out espionage operations across Europe. 5 of these operatives were arrested in London and accused of being part of a Russian spy network. The prosecution alleged that Marsalek had been giving them direct instructions from his hideout in Russia. Recent reports suggest that Marsalek may have moved again. Some intelligence sources believe he's now in Dubai, still operating under false identities and still working for Russian intelligence. He's become one of the most wanted men in Europe, with multiple countries seeking his extradition. The full scope of the Wirecard scandal is still being uncovered. Investigators have found evidence that the company was used as a, quote, shadow bank for Russian operations. They've discovered that Marsalek may have provided NATO secrets to the Kremlin. There are even suggestions that German intelligence agencies used Wirecard credit cards and bank accounts for their own operations, unknowingly funding a Russian spy network. In September 2024, a Munich court ordered former Wirecard board members to pay 140 million euros in damages. But that's just a fraction of the total losses. Investors lost over 20 billion euros when the company collapsed. Pension funds, insurance companies, and individual shareholders all saw their investments evaporate overnight.